I'm Joya Doss for TheStreet.com, reporting from the floor of the New York Stock Exchange. And with me right now is Jason Weisberg from Seaport Securities. 5 IPOs today. What does that kind of tell us about the appetite for companies going public right now?
I'd say it's very healthy. The investment community is able to support all these new issuances. It bodes very well for the U.S. equity market, and certainly bodes for companies that are considering, floating some stock. And one of the companies today was CVT as a symbol. It was very small float, and it was priced at 21. I think that the opening price was actually $38. So a very big premium. So it speaks very highly for U.S. equities in general.
Can you maybe speak more generally about the kinds of companies that are coming to market?
I think a lot of tech companies. To me, on the surface, it appears that it's mostly tech companies. Occasionally, you'll have a service company that comes along, but I think for the most part, it's really the tech companies because there's so much innovation, and that's just reflected in the breakdown of IPOs.
Changing tack a bit, next week is a big week in the way of data, but very low volumes this past week. Folks are on vacation. What are you looking forward to next week?
Well, next week we have several economic data points. We have the CPI number towards the end of the week. We have the retail numbers for the month of July, month over month. We have mortgage applications next week, and we have housing starts. Probably there'll be a lot of focus, although not necessarily deserved, on the retail number because I think most people are keeping their powder dry for back to school and holiday spending. That being said, I think that mortgage applications will be an interesting number because we still have interest rates, and I'm personally looking to see if there's been a rush to buy new homes prior to the QE coming to an end and interest rates starting to tick up.
And of course, we are pinned to all of the economic data because it does, in fact, affect when and if the Fed decides to taper back.
Well, that's right. But I also believe that a lot of the QE coming to an end is priced into the equity market. I think that the equity markets tend to look much further forward, 6 months to a year forward of what's actually happening real time. So when they finally decide to raise interest rates and end QE altogether, I think it'll already be built into the price. It's already built into the indexes right now.
Jason Weisberg from Seaport Securities, thank you today. I'm Joya Doss from the floor of the New York Stock Exchange for TheStreet.com.